Most people believe passive income starts when you have 10,000 days, or 50,000, or serious money. That belief keeps beginners stuck for years because they wait, and waiting delays compounding. The truth? Passive income doesn't start with capital. It starts with structure. And $500 is enough to build your first structured asset. Stay with me until the end, because I'll break down a realistic beginner strategy, not hype, not guarantees, just smart positioning. First, let's reset expectations. Passive income does not mean money with zero effort. It means effort now, system later, and over time, reduced daily involvement. If you understand that difference, you're already ahead of most beginners. Now let's talk strategy. When you only have $5, you cannot afford randomness. You need allocation discipline. Think of $500 as seed capital. Your job is not to flip it. Your job is to plant it. Strategy 1. Build a core market asset. One beginner-friendly approach is diversified index investing. Instead of guessing individual stocks, you buy exposure to a broad market. This reduces single company risk. It increases long-term probability. And historically, broad market exposure has rewarded patience over time. With Fiverr, you're not expecting life-changing income immediately. You're building ownership. Reinvest dividends. Add contributions when possible. Let time work. Because passive income at the beginning looks small, but small systems compound. Strategy 2. Create a micro-digital asset. Passive income is not limited to investing. It includes digital templates, downloadable planner, beginner guides, simple niche tools, printable educational resources. With $500, you can invest in basic design software, buy a domain, set up a simple storefront test. A niche idea. The goal isn't perfection. It's proof of concept. One product that generates even small recurring sales changes your mindset. You move from consumer to creator, and creators build assets. Strategy 3. Skill to asset conversion. Here's something most beginners ignore. The fastest way to build passive income is sometimes increasing your active income first. You could use $500 for certification courses, software tools, skill development, equipment for freelancing. A higher-paying skill allows you to invest more consistently, fund digital assets, scale faster. Passive income grows faster when cash flow increases. Now let's talk about risk management. With small capital, risk tolerance must be realistic. Avoid high volatility speculation. Double your money offers guaranteed income claims, strategies you don't understand. If it sounds urgent and easy, it usually isn't sustainable. Long-term wealth rarely feels exciting in the beginning. It feels disciplined. Here's a simple beginner allocation example. Out of 500, majority into diversified market exposure. A smaller portion into building or testing a digital or skill-based asset. Focus on consistency. Reinvestment, tracking results, learning from data, not emotion. Now let's talk mindset. Most beginners ask, how long until I make real money? That question kills progress. The better question is, how many assets can I build over the next 5 years? Because passive income is stacking. Asset 1 funds Asset 2. Asset 2 funds Asset 3. And over time, the system becomes self-reinforcing. Here's what $500 really represents. Not income, not profit. It represents identity. When you invest intentionally, when you build something that can produce value without constant labor, you stop thinking like an employee. You start thinking like an owner. And ownership is where leverage begins. Will $500 replace your job? No. But can it start a system that compounds for years? Yes, if structured properly. And structure beats speed. Every time. Remember, income pays expenses. Assets create leverage. Leverage creates freedom of choice. And you don't need massive capital to start. You need clarity, you need patience, and you need consistency. This video is for educational purposes only, and not financial advice. Always do your own research before making financial decisions. If this helped you see how small capital can become structured assets, subscribe for more practical, beginner-friendly insights on building long-term wealth systems. And remember, $500 isn't small. If you treat it like a seed, I'll see you in the next one.